All right, today we're diving into a Japanese company that you might not have on your watch list, but maybe you should, Mitachi Sangyo. We're going to break down their latest numbers, which are, well, pretty incredible. We'll look at their strategy for the future and really get to the bottom of what makes this company tick. So let's jump right in.
Okay, let's just start with the headline number, the one that really grabbed our attention. A 70.8% jump in net profit. And that's year over year. I mean, come on. When you see a number like that, you have to ask, what on earth is going on here? So let's dig in and find out what's behind this massive surge.
So, our first stop is unpacking these frankly exceptional financial results. We're going to look at the raw numbers that show this company is just firing on all cylinders. But we'll also touch on a really interesting point, why the market might not be fully appreciating what's happening here.
Just look at these numbers. The scale of this is, wow. Sales revenue rocketed up by more than 46%. That's huge. But here's the really crucial part. Look at how much faster their profits grew. Operating profit up 66%, and net profit, well, that's the 70+% we just saw. This tells you something really important. They aren't just selling more, they're making more money on every sale. It's not just growth, it's smart growth.
And this chart really puts that jump into perspective, doesn't it? This isn't some small, gradual increase. We're talking about going from under yen 1 billion in operating profit to over 1.5 billion in just a single year. That's a massive leap. It really points to a business model that's starting to scale in a big way.
And here's the kicker. They managed to pull this off while actually getting more efficient. Their profit margin actually went up. Think about that. Costs for everything, like logistics and hiring people, are on the rise. And yet, they squeezed out more profit. Especially in the electronics trading world, where margins are often razor-thin, this is a huge sign that they are managing their operations incredibly well.
Okay, so this begs the question, right? We've seen these amazing numbers, but what does Mitachi Sangyo actually do? What's the engine behind all these billions of yen? Let's take a look under the hood.
So, at its core, the business is split into two parts. On one hand, they're an electronics trading company. Think of them as a distributor for things like semiconductors and other electronic parts. But the second part, and this is really important, is something called EMS, or Electronics Manufacturing Services. Now, if you're not familiar with that term, it basically means they build and assemble electronic products for other companies on a contract basis. So they're not just selling the parts, they're putting them together too.
So who are they selling to? Well, a bit of everyone, which is a good thing. They're big in automotive electronics, and we all know how much tech is going into cars these days. They're also in consumer devices, office equipment and things like that. Plus, industrial machinery, and even the fun stuff, like the electronics inside gaming machines. Having their fingers in so many pies gives them a really stable and resilient foundation.
Now, if we look at where their sales are coming from, you can see it's mostly a domestic Japanese business, right? About 83%. But I want you to pay close attention to that smaller slice, the overseas business. It's about 17% right now, but trust me, that piece of the pie is about to become very important to their story.
So, this brings us to their strategy. How are they planning to grow? Well, they're not just sitting back and being a simple parts trader. No. They are fundamentally changing their game plan. They're evolving from just being a middleman to becoming a truly essential partner for their customers.
And this right here is the heart of it. They are shifting from being just an electronics trader to an integrated solution provider. That's a bit of corporate speak, but what it really means is they're getting involved much earlier and deeper in their clients' projects. They're helping with design, with manufacturing. They're adding a ton more value. And when you add more value, guess what? You get to charge more and make better profits. You can really see this in how they talk about themselves. They're not just a supplier anymore. They see themselves as an innovator that solves real-world problems with technology. And that's not just marketing fluff. It's a real mindset shift. It's the difference between just taking an order and being a creative partner. For an investor, that's a much more exciting story.
And it's not just about their customers. They're turning that innovative thinking inward too. They're using things like generative AI to handle all the boring, repetitive stuff. Data analysis, creating documents. Why? So their employees can spend their time on high-value work. We're talking face-to-face with customers, brainstorming new ideas. It's just a smarter way to run a business, and it directly boosts productivity.
All right, let's switch gears and talk about the second major growth driver here, their global expansion. Japan is their home base, and it's strong, but they're making a really smart, calculated push outside of Japan to power their next big leap forward.
And it's already working. Remember that pie chart a minute ago? Overseas business was about 17%.
Well, in the latest quarter, that number has already jumped to over 20% of their total sales. That's not slow and steady. That's rapid progress. The momentum is definitely there.
So they've already got a presence in key spots like China, Southeast Asia, and the US. But the really exciting move, the one you need to watch, is India. They just set up a new subsidiary there in July 2025. And they're not just dipping a toe in the water, they are specifically targeting India's booming mobility and electronics markets. I mean, talk about a smart, forward-thinking play into one of the fastest-growing economies on the planet.
Okay, so let's bring this all together. This is really the heart of the matter for any investor looking at this company. On one side, you have these incredibly strong results and a super clear strategy for growth. But on the other side, what does the stock market think? That's the million-dollar question, isn't it?
And this is where things get really interesting. You see this weird split. Look at their profitability. Their return on equity, or ROE, is 11.25%. Now, for a Japanese company, anything over 8 to 10% is considered really good. So they're highly efficient with their capital. But then, you look at their valuation. Their price-to-book ratio is below 1. In simple terms, that can mean the market thinks the company is worth less than the value of all its stuff, its assets. It's a classic sign that a company might be undervalued.
So we're left with this one big question. Here you have a company that's firing on all cylinders. Amazing growth, getting more efficient, and making smart moves both at home and abroad. And yet, the market seems to be, well, shrugging its shoulders. Is it possible that the market is just completely missing a company that's right in the middle of a massive, successful turnaround? That's the question all this data points to.